Ray Dalio issued a note to his investors and then also published it on LinkedIn. Pretty long read, but a good one nonetheless. Dalio is kind of delving into the bond market, and he's one of the most prolific investors, of course, over the last decade or two. And his long-term outlook is pretty bearish for the dollar and pretty bullish for some of the Asian markets, specifically China. Interesting point in this note for crypto markets, at least, is that he foresees tax regulations and other regulations around wealth being an impediment to holding Bitcoin. He's saying that the downturn in bond yields, which has been going on for quite a while, as we've seen quantitative easing, the printing of money, is going to lead to wealth tax as people try to flee into riskier assets or assets that the government can't control, like gold or Bitcoin. So I'm going to punt this to the group. I think, Naomi, your take, what's your long-term economic outlook? Where are you putting your money? Are you putting it in bonds?
Obviously, I'm putting my money into Bitcoin as a long-term economic outlet. I think that's why a lot of us are here. We like the idea of having an alternative because we see what the other alternative is, and that's just increasing printing of money. You have the Treasury that is just issuing so many bonds, and then the central bank that is just printing a ton of money in order to buy those bonds. And so as a result, no one really wants to buy bonds right now, as you mentioned, Will. It's like they're having to, like we saw last week, the yield is rising because it's trying to incentivize people to get into this market that no one's really interested in right now. I think Ray Dalio has a great point there. He's obviously a very smart guy, and he's recognizing that the US economic outlook isn't looking that great right now for people. There is no sane reason why people should be holding assets in the long term when they're getting below inflation yields on them. So, people are looking to other assets, better ways to store their cash reserves. You have MicroStrategy, as we mentioned, who's just like, I'm buying Bitcoin. I'm buying $1 billion more Bitcoin. I'm buying a gazillion more Bitcoin. They're just like all in on Bitcoin. They're issuing all this debt for their company so they can get even more Bitcoin. And their reasoning is because it is a better store of value than cash at the moment. They think that it is safer for their customers, for their shareholders, than storing their money in cash, which is just going to get inflated away with all of the money printing that is going on. So I tend to agree. Like last year, we saw the amount of US dollars in existence rise by 41%. This year, obviously, it's going to be a whole bunch more as we continue to print money. So I think that the sane approach is to look for things other than cash.
Yeah, I think that's totally right. I want to throw this over to Zach. When you're reading these investment notes, just as from an editorial perspective, what are you looking for in them?
That's a great question. I didn't read this investment note, so I can't speak to this one specifically, but I will speak on the topic of people opining about Bitcoin. I think it's interesting to see, these Wall Street titans, writing this stuff down and sort of reckoning with this new asset class that is emerging before their eyes, right? I think, most people had been dismissive of this. And so you're seeing sort of these conversion narratives right now, like, oh, okay, now I reassessed and here's why. And we're in a different macroeconomic environment in which an asset like Bitcoin makes more sense. So I think, I don't want to call it like mental gymnastics, but like looking at sort of like, the evolution that they're articulating here, again, these are conversion narratives and like kind of like going along with them on their journey to why they came to this conclusion. I think that's the thing that's interesting to me from an editorial perspective. Naomi, what do you got?
Yeah, I want to add to that, Zach. I think you've hit the nail on the head there. When people first got excited about Bitcoin in 2009 and people were looking at this saying, this is the future, or in 2008, when the white paper was released, it was because people saw that this was going to happen. People predicted this. And as you said, Zach, all of the institutional players were like, this is ridiculous, magic internet money. No one's going to take this seriously. But the reason why people at the outset were so excited is because we were right in the thick of the 2008 crisis. We'd seen a huge amount of money printing. We thought there were going to be huge inflationary effects, and it's debated whether or not we saw those. Obviously, we got the education bubble, the college bubble just went out of control. We got the housing bubble was still out of control. No real policy changes were made there, so people are still pouring money into real estate, and it's getting out of control. So people expected to see much worse, and then the amount of quantitative easing that we're seeing at the moment is completely a different ballpark to what we saw in '08. Like it's astronomical compared to what we saw then. And so I think that at the time, people did recognize that this was the trend and there was no stopping it. And they tested the waters in '08 and it was just going to continue. And they were absolutely right. And now you have these other smart people jumping on board saying, yes, we actually agree 10 years later. So it's great that they're finally, joining the game. But people have been predicting this for a while. And I think those early predictors were correct. Zach?
Yeah, I mean, the skeptic in me is also like, money talks, right? And all of a sudden there's these big, giant numbers being bandied about around this thing. And you see it with NFTs and you see it with Bitcoin. And at some point, these numbers get impossible to ignore for people who are in the business of making money. So
well, it's a chicken and egg, right? Those numbers come about because we've just seen a huge amount of stimulus. Like that's how the bull run was created. Everyone's pouring their money into crypto. And it really started with MicroStrategy, I would say, when they were like, hey, we're buying a bunch because all of this printing is ridiculous. Jen, what were you gonna say about all this?
Well, I mean, we keep bringing up MicroStrategy. Michael Saylor tweeted this morning that Bitcoin is the obvious answer to what Ray is saying. But I want to talk about a future with taxes and regulations and even higher fees. What do people need to be cautioned against? Because we're saying that Bitcoin is the obvious answer. And should these things come to fruition, what do we need to worry about?
Ben, you want to take this one?
I mean, I think we'll take it away.
Okay. Yeah, I think what Dalio is kind of noting in the piece, so not my opinion, his, is that as inflation occurs and you see bond yields decrease, we're going to see large flights of assets into different asset classes entirely. So like gold or Bitcoin, something where the government cannot seize it. We know that Elizabeth Warren has just proposed a new wealth tax, and Dalio sees a wealth tax of some sort coming along the pipeline in the next few years. And, there is the possibility that, a government in some future point decides that they don't like Bitcoin and take some negative actions against it. You see that in other countries like India all the time where they try to ban Bitcoin. It's difficult to do, but it's not unfounded. In the United States in the 1830s, gold was banned and it was seized throughout the country. So there's a precedent for it. And there's also the stage is kind of set, in Dalio's opinion, for this kind of movement of asset classes entirely.